Welcome to another episode of the Power Law Investor. Today is April the 4th, 2025, Friday. And as I'm making the video, Bitcoin is trading a little bit above $82,000 and Kaspa is trading just below 7.5 cents. And today we'll be discussing an alternative methodology and an evolution of trying to understand the movement in Kaspa. We'll trace a little bit of the background of how that initial thoughts of using the power law around Kaspa came, what we've been seeing recently, and what might be an alternative methodology to get better results. And of course, as always, this is not financial advice, so you should do your own research. And thank you for trusting me with your time. So let's take a step back and quickly review what the power law was. For Bitcoin, which is where the power law originated, or the first use in crypto came about, it's basically taking a log-log plot, taking a log in the x-axis, which is time, and a plot in the y-axis, and taking the log of that, and seeing if there is a strong trend line. And it turns out there is a strong trend line, as represented by this high R squared value, which means 95% of the variation in this price, which is the blue line, is explained by this trend line, which has this particular equation. And we've got about a little under 5,500 days of data. And based on that, we can derive an equation, a best fit equation for how the price of Bitcoin is evolving with time. So you can see over here, because we've moved from the log domain to the linear domain, we have curves instead of straight lines. And we end up seeing this sort of trend. Now, if we assume that the future is like the past, we can make predictions on what the price of Bitcoin, etc., is going to be X amount of days into the future. And this is the equation that we're using. And using this equation, it tells us that in about a year's time, 2026, April 11th, the price of Bitcoin should be about $130,000. Right? Now, this is, of course, on trend. It may go above the line, it may be below the line, but it's saying this is what it is right now. And when you look across different people in the crypto space, you'll see slightly different numbers, but this gives you a ballpark of what we might expect, right? And the numbers are slightly different because we use different data. We might use some filtering techniques, but more or less you're kind of seeing this return, okay? And as you can see, when it drops down to say about minus 50% below this trend line is a good time to buy because the price is low. And then when it goes way above the trend line is a good time to sell, okay? So that's how it originally came about with the idea of Bitcoin. Now, enterprising people like myself and others started to look for other cryptocurrencies that would be following the same sort of trend, a strongly mathematical growth rate in price with time. And Kaspa was the one that stood out. When I did the analysis for the first time, it had a similar R squared to what Bitcoin was showing, but it was a much younger cryptocurrency, so with fewer days of data. But the trend was very promising. And because of the way the math works out, it was showing a much faster growth rate because it was at its earlier part in its cycle. And then using the same mathematics, we ended up with predictions for this in about a year's time to be around 75 cents or so, based on the current best fit trend line. And so that was very exciting. And that was the premise of the power law investor, that we're using these power laws, which is this sort of equation, to predict what the price is going to be in the future using a mathematically derived basis for what's happened in the past and making the assumption that the future is going to be like the past. Now, as you can see, with Bitcoin, we've continue to follow that, but with Kaspa, we've dropped way below this minus 50% trend line, which typically had been a point which was a good point to buy. And so the question comes about, hey, is the power law broken for Kaspa? Now, again, the key assumption has always been that is the future going to be like the past? Kaspa is a different beast than Bitcoin. It's evolving a lot faster. It has massive technological advantages. It's much quicker. But at the same time, the ecosystem has changed. When Bitcoin came out, it was the only cryptocurrency and had basically untapped uh, green fields to go into. Whereas now with Kaspa, there's a lot more competition. The idea of the cryptocurrency world is much more widespread. And Kaspa's not coming up in a vacuum. It's also responding to what's happening with Bitcoin. And perhaps more importantly, because we've only got about one-fifth of the total amount of data that Bitcoin has, we have a lot less confidence in what's going on. So that being said, we've seen this drop in Kaspa. And when we look at it in the linear plane, it was supposed to be hanging around at most touching this green trend line and then bouncing back up, but it's now way, way below it, right? So at this point, we need to take a step back and look at the data and say, hey, this seems to not be responding the same way that it was before. What's going on? Okay. And we could say that the trend line is broken and that's terrible. But we're investors and we want to try and figure out what is a quantitative way to try and make the best decisions going forward. And this was the same thing that I've been wrestling with for a while. There's a great Casper community and people are very enthusiastic about price, but it's quite possible that we are going to or not going to see a return to the trend line for a while, or it may happen. So there's just a lot more uncertainty around. So what's a good way to try and make decisions in this sort of situation? And what I wanted to show you guys was an alternative way to think about this that hopefully, when implemented in the future, would do a good job of protecting us in many ways. It's not a free lunch, but you'll see what I mean. So the idea that I came up with and that I've been seeing with others is the idea of using moving averages and moving average crossovers to figure out when is a good time to buy and when is a good time to sell. So here, let me explain this with the example of Bitcoin over here, right? Here you have the price of Bitcoin and you have the 120-day moving average. And so the strategy is really simple. Whenever the price crosses above the moving average, you initiate a buy. And whenever the price crosses below the moving average, like say about here, you initiate a sell. Now, this is fundamentally different from what we do with the power law, right? With the power law, what you're doing is buying low and selling high. This is an example of something called mean reversion. We think it's going to go back to the trend line, right? That's a whole family of strategies that involve that. Now, when we tried to implement this with Kaspa, we found that right now we're not sure whether it reverts back to the mean. The mean would be the orange line, but we've seen significant deviation from it. So another strategy, another family of strategies is called trend following or momentum strategies, in which the idea is I'm not going to buy low and sell high, but rather I'm going to wait until the price action has sufficient momentum and I'm going to ride that trend. All right. So there are basically three large ways of making money, or three ways. The first one is trend following, which is what I'm talking about here. The second one is mean reversion, which we were planning on using or we were using with the power law, which has worked with Bitcoin, but not worked with Kaspa. And the third one is arbitrage, where you're able to buy something at a cheaper price and sell it at a higher one, maybe using geography or different interest rates, etc. Right? So what we're looking at here is what if we were using trend following or momentum based strategy for Kaspa rather than using the mean reversion as represented specifically by the power law. Now, the power law is very intuitive, but if the price drops below, as it has right now, who knows how long it's going to bounce around here before it comes back? And the question may also be, does it ever come back? So in this situation, if you use something like a moving average, and there are different ones in here, but I'm using moving average because it's really simple, and I'm a big believer in simplicity, and I want to share something that you guys can implement on your own. without necessarily having to consult me. I hope you'll keep on coming to the channel, but of course, doing something on your own is much stronger. So the idea would be that, as represented by Bitcoin, is that we wait until the price has sufficient upward momentum to cross this moving average, and then we hold it all the way until it goes down below the moving average, and then we sell. So to test this, I developed some backtesting code, and here's some of the results that we get for Bitcoin. For Bitcoin, depending on what time period we use, so this is 2015 to 2020, the best results were provided by the 140-day moving average. And compared to buying and hold, if you bought and hold, you got about an 87% return. But if you used a moving average, a 140-day moving average to make buy and sell decisions, you ended up with about 120% annualized return. And the difference in total profitability was between $217,000 versus $506,000 if you started off with a pot of $10,000, right? So quite a significant difference. And then if you took a different time period, if you said, hey, maybe it's just this particular time period that there's something special about this. Maybe if I want to use a different time period, I'll see completely different numbers, and this is just a fluke. We took another time period from 2020 onwards to the current. We find that really good results are being given by the 110-day moving average. And the 140-day moving average, which we got for the previous time period, was still better than buy and hold, but just not by quite so much. And when I've done some further analysis out of this, it turns out between the 110 and 120 is a pretty good moving average, right? So what does that mean? That means that if you wanted to make, so in this case, let's just, your buy and hold profit would be $102,000. But if you were using the 110-day moving average, you'd end up with $209,000, right? So you effectively doubled your returns by using this moving average. Now, this is not all encompassing because you've got to worry about things like taxes, transaction fees, etc. But it gives you the generalized idea. And the generalized idea over here is that, hey, when the price is going down, we protect ourselves from most of the decay, and then we buy it when the price starts going up. Do we catch it right at the bottom? No, but you catch most of the move upward. And this also prevents more serious drawdowns. There's something called the Sharpe ratio, or the more appropriate word for this would be something called the Sortino ratio, which looks at, hey, how much upside are you catching versus the downside, and the downside risk, and how much drawdowns you've had. And using these moving averages, you end up with a significantly smoother performance, just like the kind of issues that we're seeing right now with Kaspa. When the prices drop down, getting out at the right time prevents a lot of those drawdowns. Even though it's not for free, you don't get as much of the upside. So running a similar analysis like this for Kaspa, which I haven't seen anyone else done, but you guys are going to be at least sharing it, getting it from my perspective, shows that we have some opportunities to make decent returns while limiting the downside. Okay, so now looking at the 2023 period to 2024 period. Now, choosing the dates is particularly important in this because Kaspa is a young cryptocurrency, much younger than Bitcoin. So we don't have as much data, but we can try and make some get some useful understanding from looking how using the moving average works, right? So from the 2023 period to 2024 period, which was much earlier in the Kaspa cycle, actually the best performance was buying and holding, right? There was no moving average in my data set that worked out. You ended up getting pretty close with the 20-day moving average, and then you got pretty good with the 130-day moving average. And these are all phenomenal returns, right? You'll notice they're mostly above 1,000% annualized. But the buying and hold gave you by far the best result. And so I take these results with a little bit of grain of salt because it was so early in the cycle and the prices were shooting up so fast that it wasn't mature enough. But then if we start using a little later time, like let's say if we chose a 6-month period from January 2024 to June 2024, well, it turns out that 40, 50, and 230-day moving averages worked out pretty well. but they were just keeping up with the buy and hold, right? Just about the same. So buying and holding, much easier. Why would I want to buy and sell if I can just hold it? But then the picture starts changing as Kaspa starts dropping, right? As you know, KRC20 started about September, and then we've had this big decay in prices. So just to look into this will give you an idea of what I'm talking about. This decides to load. Well, we can look at the Kaspa price over here, right? If you look at the let me turn this off for now. If you look at the Kaspa price from about June onwards, right? So 1st of June is around here, and you look from this point onwards, it doesn't have that rapid rise anymore. It sort of peaked and then has been descending ever since, right? And so in this regime in which we find ourselves right now, what are the moving averages that work well, right? So this is again what I just showed you from January to June. From June till now, what you find is there's no moving average that gives us positive returns. So it doesn't help us avoid everything. But compared to buy and hold, in which you've lost more than 50, about 55% annualized, if you choose the 40-day moving average, you end up doing considerably better, right? And that's the point that I want to make is even though Kaspa has been having this big decay, by the use of moving averages and adopting a momentum strategy, instead of using this trend strategy and just hoping, oh my God, I hope that it comes back. I hope this Kaspa price comes back. This gives you a quantitative way that's been back tested that allows you to escape the worst of what's been happening. So this gives us the whole over the entire history of Kaspa from 2023 up to current. And you can see that if you were using the 40-day moving average, you'd do just as well as buy and hold. But it's all tilted towards the tail end, right? Because buy and hold does really badly now when the price is going down. But the moving average momentum strategy gets you out. And what does that look like? Well, it looks like this. Using the 40-day moving average, using the 40-day moving average, you can see that the crossovers, it would have gotten us out effectively around 12.5 cents. And then we would have stayed out from 12.5 cents until just about now, about 7 cents or so. Okay. Now it's a coincidence that this has happened today, just when I'm making this video, and I've been working on this for a while now to try and get this all nice and polished. But you can see that if you believe in the momentum-based approach, based on what we've seen so far, using the 40-day moving average is pretty good. You can try with the 130-day moving average, but if you look at the most recent time, the 20-day moving average has done better than the 130-day moving average over here. But you could say the 130-day moving average works well also. So if you move this to the 130-day moving average, let's do this in real time and see what that looks like. You want to be waiting till about 10 cents. Right? My personal preference, it feels to me that the data is a lot more robust about the shorter moving average. The shorter moving average responds a lot more quicker because you've only got 40 points of the moving average versus the 130 or whatever it may be. Right? And so I wanted to share these results with you guys because Kaspa was following a power law, right? There's no doubt about that we were seeing this power law action, and then whether this is a temporary deviation or a permanent deviation, we don't exactly know. But we can do better than buy and hold and de-risk the fact that Kaspa may crash down significantly more given all the turmoil that we've been having in the overall crypto markets and the overall equity markets and global financial markets, right? So if you want to use a strategy like the 40-day moving average, it's justified in giving you some degree of protection from the downside. Now, again, you should do your own research. And if you really believe in Kaspa long term and you don't mind the drawdown, you're going to get more bang for your buck if you keep on buying at the lowest prices, obviously. But in this way, you're waiting for some positive momentum to be established, and then you're going ahead and making your buy decisions. So I wanted to leave you guys with that we are around the 40-day moving average, which historically is a good point to end up making buy and sell decisions. It's a very simple strategy. When it crosses the 40-day moving average going upwards, you buy. When it drops below the 40-day moving average, you sell and exit the market. It doesn't take into account taxes, it doesn't take into account transaction fees. It just says very simply when it crosses above, you buy, when it goes below, you sell. So you're going along with the momentum. It's a reactive strategy rather than a predictive strategy. It's predictive in the sense that, yeah, you hope that the past is like the future, but it's a different kind of prediction about the future. You're just reacting to how the price is changing rather than in the power law, making a prediction on, hey, I think it's going to follow this line over here, right? So I wanted to present to you this different approach over here. There are ways to optimize this further, and I'm working on that. And the way that you can support me and give me some motivation is by liking and subscribing and commenting on this. So hope this is useful, and I will see you on the next one. Cheers.